Hello and welcome everybody to today's live commodity market analysis with the Gold and Silver Club for the 1st of June 2017. During today's session, we will be covering live market analysis. We will be going through a watch list of trading opportunities, a forecast of where we expect gold, silver, and also oil to be heading next, answering questions, and of course providing live support. So before we get started, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is regarded as the go-to authority on commodities trading. As internationally respected experts, our analysis and our opinions on the metals, the energies, and the agricultural markets, they are routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal, and of course, it is a pleasure to be here as well on FX Street. For further information on the Gold and Silver Club and our expertise, please do visit www.thegoldensilverclub.com. Okay, so with that, before we get into it, before we go through the charts, we'll just talk you through one of the top trades that we've had over the last week, our portfolio performance, trading performance using our research-driven strategies. So the top trade that we've had over the last week has been taking advantage of the sell-short opportunity following on from last week's OPEC announcement, where we saw oil break down and very much provided a perfect opportunity to sell short. We saw an aggressive selling off the back of that announcement, and we capitalized on the trade with a 250-point move, and we've also re-added to a position as well. So we'll go over to the charts, we'll talk you through that, and we'll talk you through exactly what we are anticipating next on gold, silver, and oil. We'll have a look at a few other markets as well, some of the intermarket correlations. So with that, first of all, we'll start off here with oil. Now, for those of you who are on last week's session, we talked about the fact that we were expecting downside for oil, that very much we felt that a lot of the move had already been priced into the market. So we saw oil essentially had a very strong rally off the lows here, going back to the beginning of May here. We rallied over an 800-point move in anticipation of the OPEC meeting. We saw a lot of fuel behind that trade. And we essentially saw a lot of momentum right into the OPEC meeting. In fact, on the day of the OPEC meeting, before the announcement had been made official, we saw a spike high here on oil. Very much the case of buy the rumor and then sell the news. So once the actual OPEC announcement had been made official, we didn't really see too much more momentum to the upside. It was a bit of a disappointment to a lot of traders and investors that OPEC didn't come out with any additional extension. So they went ahead with a nine-month extension, which was anticipated. They could have gone ahead with a further extension, for example, 12 months, which would have caused likely more upside. But because the news was as anticipated, we saw immediate selling off the back of that announcement, and then later on in the afternoon it really started to pick up momentum. So we saw a continued breakdown in price. In actual fact, we've come all the way down on that day. It was over a 250-point move, which we've capitalized on, banked profits. We then saw a retracement into the close on Friday, but we haven't seen any momentum behind that move. So oil hasn't really got a catalyst at the moment to continue to follow through to the upside. And you can see over the course of this week, we've seen additional momentum to the downside. We continue to actually have a sell short on oil at the moment. We have the crude oil inventories, which are coming up in approximately just under 1 hour. And we'll see what sort of impact that does have on the prices. And of course, tomorrow we have the oil rig count, which has been going up the last several weeks. We continue to see the oil rig count go up. And right now, I would suggest momentum, sentiment at the moment is in favor of the bears. The path of least resistance for oil at the moment is down. It would take something quite special right now for it to break out and really start to build up momentum to the upside again. We've got all of this overhead resistance to contend with. And if we go over also, we'll have a look at UK oil shortly as well. But essentially, retracements right now are being sold into. We saw that again just today and yesterday as well, where we saw retracements into the close, but essentially the momentum has continued to the downside. In terms of the next major levels I'd be looking at here, I'm essentially looking for support to get taken out. So we're getting supported around the 48 level to 48.50 zone. On a closing basis so far, since the rally that we had at the beginning of May, we haven't seen oil close back below 48.50 or 48 US dollars per barrel. So in the short term, that would need to happen in order to see further downside here for oil. So far, it is doing well to hold on to that level on a closing basis. It is getting bid around the 48 to 48.50 zone. However, we are continuing to get lower closes, lower highs, lower lows. That's been the case over the course of this week. And I am looking for more momentum to the downside. And essentially, I'd be looking for a move back towards 46 US dollars per barrel. So I'm looking for a breakdown of essentially the neckline below here, which sits at the 48 level, break below that level, close below that level. You've got a V-shaped reversal pattern as well. If we break below and close below 48 US dollars per barrel, we have clean air then for a move back towards 47. So short term, that's our view right now. We'll see what happens over the course of the oil inventories today, and of course Baker Hughes announcement tomorrow as well. But so far, I see this as a continuation to the downside, and right now it's the path of least resistance is for a sell. Now it can also move over to UK oil. That is US oil. And in fact, before I go to UK oil, I would just put this on your radar. The fact that, of course, we've got the inverse correlation here as well with US dollar, Canadian dollar, which has been building a base over the last week. Again, we discussed this time last week after the OPEC meeting, and US dollar, Canadian dollar, you should also have on your radar. It has been basing over the last week. It's also found support, the 61.8 Fibonacci retracement level. We've got an underlying trend channel, which is very clear as well. We've had quite a lot of support here with higher closes, higher lows, and higher highs. In fact, yesterday, US dollar, Canadian dollar managed to close above the 8-day exponential moving average, the 50-day moving average. So far, we haven't really moved too much in either direction so far today, but it's holding up quite well. It is basing, it is broken out of this downward trending channel as well over the course of this week. And if it can build up a bit more momentum, close above the last week's highs here, we should then be on track for a fairly clean run up to the 38.2 retracement here, which would be approximately just going up to the levels that broke down previously prior to OPEC. So that would be a relatively decent breakout, about 150 point move off the lows here from around the 100-day moving average, and that would represent quite a good short-term move. And I could actually expect higher prices as well, certainly if we were to see oil continue to break down. So US dollar, Canadian dollar has quite a strong, as I'm sure a lot of you know, has quite a strong inverse correlation to oil. Sometimes it can provide a better risk to reward than oil as well, depending on how much oil has already moved. So if you consider at the moment, if you're expecting more downside momentum with oil, US dollar, Canadian dollar has only really started to base out over the last week. From a risk to reward basis, it's still at a level where it could still offer a good risk to reward, whereas I would suggest entering a fresh trade on oil at the moment, you'd probably want to wait for a retracement and then get into a retracement. I will just show you that. Maybe you can't see that as clearly here because of my charts, which have a few indicators on at the moment. So we can just take it out and talk you through that just based on more of a raw chart, just to give you an idea of what I mean by that. Okay, so I'll just bring out quickly a raw chart, and I will just ever so quickly make that so you can see it a little bit more clearly, so it's not grey and green. So just bear with me whilst I do this. Okay, here we go. So this is what I mean by the risk reward at the moment. So if you take into account the fact that we do see an inverse correlation with US dollar, Canadian dollar versus oil. So if you're looking to take advantage of the momentum to the downside with oil, but your risk to reward is not great. So what do I mean by that? It means that the positioning of your stop loss relative to your take profit target is not ideal. It doesn't give you the right risk to reward. Whereas if you consider US dollar, Canadian dollar at the moment has been basing, it's building a pennant formation, it's broken out of resistance here, then from a risk to reward point of view, getting in even now for argument's sake would mean that you could be looking at the potential for a 1-to-1 up to 1.3612 zone, 2-to-1 up to 1.3272, and so forth. So the risk to reward is essentially it's more lucrative. Whereas if we bring out oil, although I'm expecting more downside for oil here at the moment, looking at that for a fresh entry right now, depending on where you will position your stop loss, you probably want to put it above the more recent swing high. You'd be looking for quite a considerable move lower back towards the 46 zone, maybe even below that as well. So US dollar, Canadian dollar is offering quite a good risk reward. If we continue to see momentum, what I would like to see it do either today or tomorrow would be just a little bit more confirmation. So far it's done well. It needs to do a little bit more work. It's not quite out of the woods yet where it could turn around and break down. It needs to, in my opinion, close above the weekly highs, close back above the 50 MA, have another consecutive close above the highs from the week here, higher low, higher close, higher high. That would be good in order to really start to build up some additional momentum to the upside for more clean air as well. We discussed as well last week Australian US dollar, and ultimately this has moved exactly the way we were anticipating. We've seen a breakdown over the last week of Australian dollar, US dollar. Iron ore has been seen certainly some weakness over the last week, which is very correlated to Australian dollar, US dollar as well. And we've seen that momentum really pick up. So overhead resistance has definitely worked out very well. We've got a sell short on this market at the moment, which is getting very close towards our take profit as well. We've had another rally which got sold into earlier on this week. A lot of overhead resistance, and it's essentially created a new swing high here. And we've seen good momentum to the downside. We've also broken through this bear flag formation, which we discussed last week as well. So we've broken through that consolidation, broken close through the bear flag formation last week, but only really picked up momentum in the last couple of days, most notably overnight today. And it looks like we're heading lower here. I could see the potential for more downside on Australian US dollar, potentially even a revisit back to the swing lows here of December 2016 and 2017. Do note though, we've got non-farm payrolls tomorrow, so possibly we'll see some volatility off the back of that as well. Short term, I see the momentum go lower, but we will get short term oversold soon, and it might be that we do get a bit of a pause around the previous swing low here from the May lows here before we then see another opportunity to add for sell shorts to this position. But so far, Australian dollar, US dollar trade has continued to move well. The momentum has been good on this trade, and we've seen some good follow through over the course of this week as well. Now, moving over to moving over to gold. Gold is definitely a market you want on your radar at the moment. The reason being is that we've broken through a major overhead level of resistance last week into the close on Friday. So we broke and retested 1,265 US dollars per ounce. I will put something on your radar right now, is that you don't want to only track gold priced in US dollars. You want to be aware of what it's doing in gold price in Australian US dollars on the left here, which has already breached the April highs, and it's surging at the moment. And in actual fact, I think that's actually, it's broken out to the highest level in 2017. Okay, the highest level since the November, the US elections in November. So that is approximately at the 8-month highs at the moment. Gold price in US dollars. Gold versus the euro has found some support around the underlying trend channel. It's managed to close above some major levels over the course of this week. It has pulled back as well, but it is holding, and gold versus the US dollar pulled back again today, but got supported where it needs to, which is this underlying trend channel, which a lot of traders are paying a lot of attention to at the moment. We've been bid back up from that zone. We've had another retest at around the 1260 zone today. I would put that on lower time frame, so just be aware of this. I've got quite a lot going on this chart just because of the indicators which we're utilizing to get in on some of the tighter entries here on gold and several other markets right now. But ultimately, gold is finding support where it needed to today, which was a bounce off the 1260 zone. This was also underlying trend channel as well, going back towards the end of May here. So we've bounced off that level at the moment. I would look for a ricochet between these trend channels, continued momentum. Also, what is important is we broke out of this consolidation and a pennant formation last week. We retested the pennant, but what's really important is that the upper end of the pennant does not give way. So when it's retested, had we have broken, for argument's sake, if we broke and closed below 1260 today, that would mean that gold would be very likely to retest 1253 and possibly a further retracement lower. The fact that it's holding and it hasn't gone back within the previous pennant here means that we could certainly see gold go higher here. It's retracing at the moment. Also, should be on your radar, I'm sure it is anyway, but President Trump is due to be speaking later on today, which is going to be at 8 o'clock London time, and that is going to be about the possibility of the US pulling out of the Paris climate deal, the Paris Climate Accord, and he's going to make a statement about that later on today at 8 o'clock London time. I'm looking at that as potentially certainly could move the US dollar, could move US equities, S&P 500, Dow Jones and so forth, and that could definitely have an impact on gold as well. Thursday is often quite a volatile day for gold. And the fact that gold pulled back earlier on in the session off the back of strong ADP numbers and the dollar getting a bit of a bid to the upside, but the fact that gold did not follow through, it got bid back up again. And in fact, the US dollar index here, which I've got up on my chart at the moment, had a very shallow rally, and it's looking very vulnerable here to the potential to break below support here. It is treading water around the 96 to 97 zone at the moment, or more specifically 97. And it is a big if, but it could happen on non-farm payrolls. It might happen next week. But if the US dollar breaks through this support, this is going to lend a lot of fuel to gold and silver. If we do see a break below this major area here, the 96.70 zone, we've essentially got clean air until we get back towards the 96 level, and we're consolidating. There's not really any conviction behind the moves that we've seen, the retracements to the upside with the dollar. I was watching this carefully into the close last week to see whether the dollar could build up some momentum. It managed to earlier on this week break out, but the breakout got faded. It got sold back into. We saw it come back within the consolidation zone. It rolled over yesterday, as we saw gold most notably broke out significantly yesterday, and then we have had a little move to the upside today. We're just treading water at the moment for the US dollar index. And it is short-term overbought as well. So I could see the potential either to consolidate sideways or break lower. I suspect non-farm payroll could be the catalyst either for a breakout to the upside or a downside tomorrow. I'm sure a lot of the traders, including ourselves, will be watching out for that data. But also I think there could be a wild card today, and see what sort of impact Trump has on the markets later on. I'll be watching out for that very carefully. Now, in terms of major news items, what of course you do need to also have on your radar is the fact that we have the FOMC statement, which is coming up now in 2 weeks. So that is not far away. On Wednesday, the 14th of June, we have the FOMC statement where we could see certainly some volatility off the back of that statement. We'll be gearing up for that as we get closer and closer to that event. Next week, of course, we've also got the UK elections, which we'll be monitoring closely as well for the impact that that has on the markets, most notably, of course, the pound, the FTSE, and so forth. But at the moment, gold right now, I would watch this market very carefully as to whether we can get bid back up a little bit later on in the session here. It's finding support where it needs to right now. On the flip side of that, if we break below 1260, it could mean that gold will break back down towards 1250, and it could start a short-term correction lower in the lead up to the FOMC statement. But depending on what Trump says today, later on in the session, we could see some weakness in the US dollar, which could be a catalyst for a breakout on gold and silver. And I am monitoring gold very much so in other currencies, because it is performing well in a number of other currencies as well. So just have that on your radar as well. And again, just going back to what we're anticipating with oil here, I discussed US oil. We can also move over to UK oil. Let's go over to US oil. So there you go. I mean, it's trading near its daily lows at the moment, 48.38. We've got the oil inventories data coming out in approximately 40 minutes, but I'm still favoring more downside with oil here. UK oil as well, you can see it's struggling with overhead resistance. It's broken through some support already. If it takes out yesterday's low, it's likely to get a move back towards 50 US dollars per barrel. This is Brent crude oil. I could see still the potential for more downside. V-shaped reversal patterns like this, once they break down, once they break the necklines, normally can move quite fast. We've had a couple of V-shaped reversal patterns recently. One of the more recent ones was, of course, over April. Once that picked up momentum to the downside, we did see a lot of momentum. I don't see a reason to be long oil at the moment. Not trying to catch the low anyway, unless something really fundamentally changes from the point of view of certainly from OPEC, or from the point of view of the oil rig count or the oil inventories and other breaking news items as well. We'll be keeping an eye out for. But right now, path of least resistance, in my opinion, is down for oil, and we're anticipating more momentum to the downside on this market at the moment. Okay, good. So guys, if you enjoyed today's session and you'd like this on a more regular basis, if you want to know the exact trades that we are taking at the Gold and Silver Club in real time as they come out, so that includes the exact entry that we are taking, the exit levels, the take profit levels, the full trade management of every single trade. You get kept updated every single day, can save you a lot of time, and also can confirm what you're seeing in the charts, or give you new trade ideas as well. All you need to do is go to www.jointhegoldensilverclub.com, complete the application form, and we will get in touch with you ASAP. So that's www.jointhegoldensilverclub.com. jointhegoldandsilverclub.com. So what do you get by being a member of the Gold and Silver Club? You can join our live trading rooms during the week, which are also recorded. So if you miss a session, you can rewatch the recording as well. We go through analyzing the commodity markets, going through our trades, entry, exit, take profit, trade management. We go through a lot of research as well. So we go quite in depth into each market, not just on the charts, but providing you with a lot of research during the session too. You get notifications via email and SMS. So real time, you'll be notified about entry, exit, take profit, our trade management. So you get to know exactly what we're doing at the Gold and Silver Club, the positions that we're taking, how we're managing our portfolio, and you get access to all of our research, commodity insights, our regular commodity insights, which is giving you exclusive access to our proprietary trading research and market insights to help you boost your win rate and make sure that you're getting on the right side of the trades, the trends, you're aware of intermarket correlations, as well as fundamentals, seasonality, cycles within the markets, commitment of traders data. All of that is available to you. So again, if you'd like to really take your trading to that next level, all you need to do is go across to www.jointhegoldandsilverclub.com, complete the application form, and we will get in touch with you ASAP, guys. So again, www.jointhegoldandsilverclub.com. And if you didn't catch that, this is just a summary of what you get by being a member of the Gold and Silver Club. So access to our live trading rooms during the week. You get updated on every single trade that we are taking, notifications via email and SMS so you don't miss out on trades, the details of where we are entering, exiting, and trade management on those trades as well, a trading plan with a watch list for all of our trades every single weekend for the week ahead as well, live trade support to help you through trades, and also institutional level trading research and commodity insights to give you an edge in your trading. Okay, great stuff. So with that, guys, I wish you a very profitable day, good trading, and of course we'll catch you back here on the next session. Look forward to hear from those of you who'll be making an application to join us at the Gold and Silver Club. All the best, and we'll speak with you very soon. Thanks everybody, take care, have a great day. Thanks everyone, bye bye.